Salem. So for those of you who weren't in the room, just to say that United Oil and Gas that was advertised on the agenda, they're not going to be presenting today. So we'll move on, and I'd like to invite Paul Vonk to the stage from Angus Energy. Paul, please.
Hi, good morning. Thank you. I'd like to give a brief introduction of Angus Energy. Angus Energy was listed on the AIM market November last year, and we raised £3.5 million to do two things: drill a sidetrack in our Brockham field and drill a new horizontal well at the Litsi field. 2 weeks ago, we completed the drilling of that Litsi field. Both wells were drilled on time and on budget. So, Angus Energy, you see the management team here. The company was founded in the top left corner by Jonathan. He's about 2 years younger than myself. So we both started off as wireline engineers. I started off in Northern Africa, Egypt, Algeria, working onshore. And after about 5 years, moved into finance and became an oil and gas corporate finance banker, while Jonathan stayed in the technical side of things. From a wireline engineer, became a production engineer, enhanced oil recovery engineer, driller, and finally set up Angus Energy a few years ago. We complemented by the non-executives on the right, Rob Shepard, who is very familiar to yourselves, Chris de Goey, technical, and Cameron Buchanan for the political side. What Angus Energy is at this moment in time is very much focused on southern England, in particular the Weald Basin. We are the company that, unknown and private, was the company that drilled the original Horsehill 1 well, which might be better known to yourselves as the Gatwick Gusher. We sold out of Horsehill because we have 7.5 kilometers to the west of it. We have the Brockham oil field, which is a production field which has been there for almost 30 years. And we drilled the sidetrack to see if we can mimic Horsehill. We'll come back to that later. And Litsi is further to the south. February this year, we increased our acreage position by taking a minority stake in the Holmwood license, which is an extension of what we're doing at Brockham. Strategy, relatively simple. We increase production and recovery from our existing assets. We grow the portfolio through select onshore development and appraisal opportunities, and we keep an operational and management control of the entire process. At this moment in time, really, cost is key. Having control of the operations differentiates yourself from the majority. As you can see in the production assets that we have right now, Brockham and Litsi, we're the majority owner, we're the operator. We have partners to minimize our risk. And then we expand with a little bit of exploration. We are a production company. We don't look for the next 100 million barrel oil field, but what we have is when we know the oil is there, and that's really where the opportunity is at the moment, is like, can you get it out of the ground? Can you get it out of the ground cheaper? And are there areas that have been missed? And especially with Brockham, we'll come to that. That's a region where 35 wells have been drilled in southern England, but we're suddenly finding that a layer that we've drilled through, which was the shale layer, and it was difficult to drill through because you had a lot of losses, and you want to get through it as fast as possible, is actually the pay zone and might be much better than anything that has been produced to date. So in January, we drilled a sidetrack at Brockham. We drilled that because the Horsehill well that we drilled in 2014 had two objectives. The Portland field was new, extended into Horsehill, and there was a deeper gas target. So we drilled in 2014. It was the deepest well that was drilled onshore in more than 30 years. Unfortunately, the gas wasn't there. But in order to reach the gas, we drilled through a lot of shale, and about 400 meters of which was the Kimmeridge layers. Well, in America, there's been this big shale revolution over the last few years. So we sent the samples off to America. I said, can you tell us something, whether the shale is good enough? And they came back and they said, oh, it's awesome, it's really great. But the problem is, you cannot frack in the UK. Well, not easily. So we said, well, it's nice that we have a good shale, but there's not much we can do with that. But what we did have in it, we have 3 limestone layers in it. So the idea was at Horsehill, which we tested in 2016, is we perforate those limestone layers, wash it out, increase the surface area, and hopefully we'll get like a barrel or two to surface, so we can prove that we've got movable hydrocarbons. Well, what happened is that after we perforated it, each layer of 20 meters flowed 700 barrels each. So in aggregate, 1,400 barrels came from two 20-meter limestone layers in Horseshill. This happened in March 2016. We had a very bad balance sheet at the time, so we said, okay, we sell out our remaining minority stake in Horseshill and we focus back on Brockham. So these are the logging results that we got back from our well that we drilled in January. We reported this to the market in March. And what we found is a 385-meter thick Kimmeridge limestone layer, and we wanted to know, is Brockham the same as Horseshill? Because Horseshill flowed, and therefore are the characteristics that we have at Brockham are the same. We did a data sharing deal, and we found the maturity is exactly the same. The Kimmeridge is thicker, we have great organic contact, we've got gas shows, and most importantly, it is filled with fractures. 200 meters of that is naturally fractured. So we ran the ultrawave logging tool through it, and you see the interbedded shale limestone layers in the Kimmeridge, and those fractures, that is where the oil is. So that's where it missed in the past, because it's like tight, but the oil is there. Our colleagues at Dukok drilled the Broadford Bridge well earlier this year. They cored it, and their core show that in a well 30 kilometers to the southwest of us, again, it's naturally fractured, shale limestone layers, and the hydrocarbons are in the fractures. So what we were waiting for after we drilled the well in January and we got the result in March, we asked the OGA to put the well into production from the Kimmeridge. They approved it last week, Monday. So we're very happy because that was the last regulatory consent that we required. We're going to perforate 200-meter section and start producing from it the moment we've made a grid connection, because we expect quite a decent amount of associated gas, which will run through the generator, and in order to sell the electricity, we need to put a grid connection in place. That will take us a few months, and then in Q1 we'll start it up, which could potentially be transformational. Litsi is the well that we just completed this month. We're putting it into production, in the next few days. Moved the rig offsite last week. The objective was, it's a reservoir that has been producing there for about 15 years. It's low rates. When we acquired the field in 2012, we remapped it. We found out that the original well that was drilled by our predecessors just missed the reservoir. It's all the way at the edge. So the objective was, we drill a nice horizontal well, 1,700 meters long, of which 443 meters through the reservoir, in the horizontal grade oolite layer. This will be a stable cash flow producer. It will make the company self-funded for the next 5 years, that in itself. So we drilled the well on time, on budget. We're switching on in the next few days. On the right, you see the expectations of the independent reserve auditor that we used at our IPO. If the well produces anything more than 250, we expect roughly around 400. The company will be self-funded, and we don't have to go back to the market unless we have growth opportunities, which we think will be accretive for our shareholders. 55% of the company on the right is owned by the founding shareholders and directors. 45% is in free float, which was placed in November last year and in February when we further increased our acreage position. So strong alignment, and from what we understand of our broker, a lot of the original shareholders are still in there. We IPO'd November about 6p, currently hovering around 26, 30p, and we believe there's still quite some upside left in that. So in summary, Angus Energy, we're an established low-cost producer. We've got a proven track record of delivery. We drill our wells on time, on budget, and especially with the Wield Basin, we have a large upside potential which can be transformational for our company as well as for the UK. And those wells will be switched on next year. Thank you.